Kia ora and welcome to Shared Lunch. Well, milk is on the menu today. Synlait is not a name that you will see on supermarket shelves, but it is playing a part in our big dairy export story. I'm Garth Bray and I'm joined by Synlait's chair, George Adams, to talk about a big vote that could shape the future of the company. But first, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
No mai, haere mai, welcome here, George. A lot of people won't know what Synlait is, what it does. Can you give us a sense of where it fits into the industry?
Absolutely. And thanks for having me. Hey, look, Synlait is part of the New Zealand dairy industry. We would be described as a tier 2 player. So you've obviously got Fonterra, who is the largest of all the large dairy companies, and then there's probably 3 or 4 tier 2 players which sit just under that. So Synlait today, I think, would be the third largest by production volume in the country. So a sizable company in and of its own right, and I think a reasonably important player for New Zealand's export industry.
Yeah. George Adams, Synlait chair, that's got a pretty new ring to it, but you've got plenty of experience around boardroom tables and unlisted companies, a lot of it in sort of food and that kind of technology. But you also ran Coca-Cola Amatil here for about like a decade. What did a decade of selling fizzies teach you about how to handle the dairy industry right here and right now?
I have to say probably a decade of selling Coca-Cola, probably not so much, to be fair, but you certainly learn a lot about the commercial side of business. Coca-Cola was a fantastic gig, to be honest. And a lot of what people don't really know about it is it's one of the most efficient manufacturing systems anywhere in the world. It is one of the most efficient and smartest distribution systems anywhere in the world. And if you want to understand how to create, get a product within an arm's reach of desire of the consumer, which is part of the mantra, the Coke system is a great place to learn the disciplines of fast-moving consumer goods.
Is there much of a match then for taking those skills into the boardroom and explaining how a Synlait gets its product to market, gets that milk or whatever it is that you're making within arm's reach of desire? Great phrase.
Probably not so much from the front-end perspective, because Synlait is effectively an ingredient manufacturer. So we would sit behind the Coca-Cola type business. But from a product efficiency perspective, from a distribution efficiency perspective, I mean, essentially that's what we trade on, is being able to manufacture the same product day in, day out very efficiently, because the market for pricing is largely set. So we're largely price takers. Fonterra pretty much and the global dairy auction pretty much sets the price. So your ability to manufacture ahead of that, and should it be currency or product type, your ability to actually operate within a really strict kind of tram tracks, not dissimilar to anybody in business.
Right. What drew you to the company? Because if it's not quite exactly what you've been used to doing, it's a bit of a turnaround, really, isn't it? With a lot of interested parties having their say. What drew you in there?
Yeah, look, probably slightly unusually. And yes, I've got 10 years experience in the boardroom today. Mostly private companies, family companies. A couple I've kind of co-founded, but also probably in the last 5 or 6 years, a number of public companies also. I genuinely guess a couple of things. One, I think Synlait is important, and I'll tell you why it's important. I think it's important to the dairy industry in general. I think it's important to our farmers. It's important clearly to our staff. But it's important to have smaller companies that aren't necessarily the Fonterras of the world, who can generally go after smaller but important opportunities, because the big monopolies generally can't do that, right? And that was certainly my experience at British Telecom some years ago. But I also genuinely was very enthusiastic about the challenge, right? You've got a lot of directors and boardrooms today who are actually quite afraid and quite cautious around taking on challenges like this. And I genuinely felt, having looked at it in detail, that there was a pathway through to a solution for Synlait and for our wider, diaspora of interested stakeholders. And I felt that it was worth taking that risk.
Let's talk a bit about the pathway then, because you've had a pretty hectic 5 months since you took on the chair, and I'm just going to recap some of the events to catch people up if they haven't caught it, as I understand them anyway. First, you had a dispute over intellectual property rights and production agreements with a business partner, A2 Milk, who also happens to be quite a major shareholder, awkward, and then a bailout from your biggest shareholder, Bright Dairy, and now you're asking minority shareholders to effectively kind of hand control of the company to those two major shareholders. Am I going okay so far?
That's not bad. I'll probably correct you slightly in terms of handing control. Effectively, Bright have had control since 2010, when they were a majority shareholder. And while they dropped to 39%, I think 2013 is my history, they retained a very interesting constitutional arrangement which the NZX signed off on, whereby they could control the board. So in that sense, it's kind of status quo.
So this is coming to quite a crunch, though, because you're putting together a capital raise, basically, and a restructure of your debts and so on, and that's happening within the next week or so, on September the 18th. If we walk people through that, so those two big shareholders, Bright Dairy and A2 Milk, they're putting in close to $220 million to sort of reset the balance sheet, and that's at a time when I think Synlait's carrying about $550 million worth of debt.
All spot on so far.
So with that reset, Bright Dairy goes to about 2/3 of the shareholding of the company.
Yeah, just on.
A2 keeps its 20%, and that, if you do the maths, means that all of those other minority retail shareholders basically get squeezed down. They
Roughly
wind up
15.
with about half of what they had before, right?
Correct. Actually less.
So what makes you confident that shareholders will accept that?
Yeah. No, it's look. Honestly, you've pretty much described the conundrum that we've had, and we've been working through. And look, I'm not doing this by myself. Right? I've got I'm part of a board, which sits alongside a management team and trying to work our way through this. So essentially, we needed to raise at least $220 million. In reality, we added another $130 million, which Bright Food Group put in roughly 8 weeks ago, which was by way of shareholder loan. But it's subordinated. That $130 million is subordinated to the senior debt that we have. So it sits behind that, but it does sit ahead of our bonds, right? So ultimately, that's $350 million to reset effectively the $550 million in debt that we had. And there's no doubt about it. This effectively is a bailout, right? So the challenge, I think, for us sitting as really three independent directors is how do you go to the market and raise 3.5 times your market cap? That's the challenge. So, and we looked long and hard at how we had to also have assurance that we could raise the money because our bank refinance runs out on the 2nd of October, which is in 2.5 weeks' time. Right, so the clock is ticking for us on all fronts, on top of having to sort out the disputes between ourselves and A2, plus raise capital in a certain way, and we're also doing a refinance. I think you might have forgotten that one, but so essentially everything's moving, right? So we had to be absolutely certain that we could raise this cash. Otherwise, we wouldn't get to a point where we could do the refinance deal with the banks, who are still going to need to basically have around $450 million of flexible term debt sitting available for Synlait. So back to the challenge, which is raising 3.5 times your market cap. So to put that in perspective, if I'm sitting there as an independent shareholder with $10,000 worth of stock, this is at our previously undisturbed share price, as the term is, and I've got 10 grand in Synlait, I would have been asked for about $34,000 to retain my relative percentage holding position. Now, we did take soundings, and I have to say that it's highly unlikely that we would have raised a lot of money on that front. So then you look at, well, do you do, and the mechanism for that, is you would do generally a rights issue. So rights issues are done at a TERP, which is a theoretical X rights price, right? Minus a discount, normally 20-25%. Yeah. Given that we're in a distressed position, it probably would have been that and more, which means that we would have been issuing shares at 4 cents. That's the theoretical X rights price less a discount, right? Which meant we would have had to issue, I think, I've worked at 5.4 billion shares, right? So quite challenging.
Pinball numbers.
Pinball numbers. And the difficulty with that is then essentially if those rights aren't taken up, someone's got to pick them up, and that would have meant Bright or A2 picking up. And I genuinely think we would have ended up probably in about the same position from a shareholding perspective. And the difficulty with actually issuing stock at a discount is that the existing minority shareholders wouldn't be sitting here looking at 14% post-raise. They would have been smashed. They'd have been sitting with literally a couple of percent because we'd have been issuing stock at a heavy discount. That's the best outcome, I think, which we would have gotten to. Whereas issuing stock, which we're doing to two of the shareholders, we're doing it at a premium. So coming back to your numbers, let me just probably work through this. At the 30 cents, which was referred to this previously undisturbed price, and that's the price at which was the day before effectively we made the announcement. The minority shareholders were worth $27 million market cap. Post-cap raise, assuming the same share price, the minority shareholders will be worth $42 million. So even though you've got a smaller percentage, your shareholding, the value of your shareholding actually increases.
Half of something is better than 100% of nothing kind of thing.
More or less. So certainly in this case, 41% of something is worth a lot less than 15% of something. So we've tried to be as fair as possible, but genuinely we're threading the eye of a needle in terms of assurance on the dollars that we needed to raise, plus the bank. And also not making sure you don't crater the value for minority shareholders who actually don't want to participate.
You mentioned before that Synlait is important for a lot of reasons. Surely part of it was to give retail investors an exposure to what is an industry that underpins New Zealand. Does this cut that back?
Look, it certainly so let's go back. If you talk about percentages, yes, it does. You'd have to say that over the last few years, it has not performed particularly well, right? So and I think for reasons of COVID, etc., and particularly with the Chinese infant births dropping off from an average, kind of longer average of 17 million to maybe 9 million, which halves the market effectively.
Because most of what Synlait is doing is creating...
A big chunk of it was infant formula. Yeah. These days we're a much more diverse house. So we're infant formula, adult nutrition, ingredients into the likes of Danone's and Nestle. So there's a bunch of other things that we do, including fresh milk, and particularly the one that actually is growing for us very strongly is creams. So shelf-stable creams into Southeast Asia, and interestingly, I mean, even Fonterra is getting into that as well with their recent announcement. So yes, it does give that exposure. I'd have to say it hasn't been a great outcome over the last couple of years, but I guess we are where we are, and ultimately what I'm giving the shareholders is an opportunity to continue to participate in any upside going forward.
Should we maybe talk about what you think Synlait is worth then? What is Synlait worth?
Well, Synlait is worth... So what our market cap's probably $70 or $80 million. At the minute, that's pretty much what it's worth. Going forward, though, if you disaggregate that, right? In reality, we've got a business in Dunsandel, which I think we'll be able to get back to a strongly profitable position. The last 2 years have been challenging for a number of reasons, but largely forex exposure has really troubled the business. Haven't done particularly well there. So I think that's a strongly profitable business. Dairyworks, I think, has been on the cards for a bit. Certainly, as far as some of the parts goes, yep, we've had sort of offers. but in reality, nothing that got us anywhere close to effectively what it cost. But
Personal disclosure, I really like your Dairy Works tasty cheese. I think it's probably one of the better tasty cheeses on the market. I'm not sure if that will make the cut in the podcast, but this is
for that.
a personal disclosure of interest. Look, I suppose I was asking what is it worth because the former chair, John Penno, he was challenging your numbers, wasn't he?
Yeah.
He was saying actually broken up, this company is worth more than the reports that you are seeing it is worth, and that is why you should seriously consider not voting for this proposal and instead just put it through and you'll actually make more money that way.
Yeah. No.
Why should shareholders pay him no mind?
No, I think, look, John's a bright guy, and I have a lot of time for John, and he certainly holds, I think, a very sincere view. I don't think it's right, but I think it's a very sincerely held view. We've been looking at essentially selling a couple of the company's assets for the past few months, and as you know, we also were looking at what the Pocono business was worth. And the market's changed a little bit, and right now we just cannot find the value that John was purporting to believe that the company was worth. And that's fine. That's a difference of opinion between us. Ultimately, we also have to then take advice. So, part of doing a cap raise is you're obligated to get an independent assessor's report, which we have got through Northington. And I think Northington's numbers are the ones which the board is pretty much obligated to pay attention to. So that's the one that says that our view on the future value is that actually it was certainly lower than the numbers that John was indicating that he thought it was worth. So that's the numbers effectively that we got to plug into our model going forward, which means that ultimately we think there is value in the cap raise.
You make it sound like a very, very principled and gentlemanly disagreement, but you were talking about Russian roulette in respect of what he was saying. I mean, that's how you described it. Pretty strong words.
Yeah, look,
why is that?
Russian roulette look, look, I worked in Russia for a while, so I'm very familiar with the particular phrase. But it wasn't to describe John in any way. But John's view was essentially we should take it to VA, right? And I don't think there is an elegant VA option. I have to be really frank. My conversations with some of the receivers quite recently have been very clear and consistent that companies don't go into VA and come out looking better, right?
It's voluntary administration.
That's voluntary administration, and it essentially provides for asset breakup and sale of the assets, right? Which is so. In other words, it's a single shot, right? Whereas what we're doing, right, and bearing in mind the directors are obligated to act in the best interests of the company, right? And particularly when you get down to the point where you're looking at a challenging future from an insolvency perspective, you then also got to start to think really heavily about your creditors. So the proposal that we're supplying refloats the business, refinances the business, pays our creditors, provides a future for our farmers and our staff, and for Synlait as an ongoing business in the dairy industry. So our proposal, I believe, as independent directors, provides multiple options for multiple stakeholders and satisfies a lot more than, say, a single shot, which is let's take it to VA and see what happens.
Look, you mentioned the farmers there. If we look at the supply side, you can't have a dairy company unless you've got dairy, right? So how do you convince your suppliers to stick with Synlait?
It's a really good question. And I probably characterize this a number of ways. So we've been going a long time, particularly in the South Island. And the majority of farmers that are with us, and there's 221 at the minute, farms, have been with us since the start. So we've got a very long history with a lot of those farms. And they've been making it really clear to us that they like working with Synlait. They've had a good relationship. For the context, and it may be something that is helpful for your listeners, is that New Zealand is a little bit unusual in that a farm generally will only sell to one processor. So not multiple processors. So if they have balance sheet risk, that becomes your de facto risk also. So our farmers, who been on the land a long time in most cases, intergenerational, they feel the risk of selling to one processor very acutely, particularly if you've got balance sheet stress, which we've had. So the message that we've had from them, and I've met a lot of them in the past 5 months, is you need to sort your balance sheet out because that's a real problem for us, and you need to get back to paying market matching advance rates, right? So we acknowledge that. So one, we do, when we are back paying market matching advance rates. We announced an increase in milk price last week to $6.80, which actually is 10 cents higher than the market at the minute.
$8.60, I think it was.
Sorry,
$8.60.
beg your pardon.
So, we're really getting into the weeds or the long grass or the pastures here, but basically we've got a system where dairy companies, a little bit like a company paying a dividend, they kind of set a price that they will pay, an average price across the year, if you like.
More or less.
To suppliers, and that's a guarantee that they can take to the bank, literally.
Yep.
So if the farmers are getting an $8.60 price from you, are they breaking even now? Are their balance sheets okay?
Oh yeah, they would be. Certainly in terms of their operating costs. I mean, the good, really good farmers, been around a long time, probably slightly bigger. They're making reasonably good money at that point.
Smarter people than me, analysts at banks have said probably that price needs to be more like $8.70.
Oh, look.
How does Synlait get to that price?
Well, we do the same math as everybody else does. So we basically sit down and work out essentially, effectively, what our mass balance is. So every dairy company takes in a litre of milk, right? And then from that, you disaggregate it into the various parts. And some parts sell for more. So whole milk powder will sell for more than skim milk powder, for example. Infant milk formula powder might sell for more than that again. Creams, butters, etc. So you kind of break it up into a range of different products, and they sell for different amounts of value. And what you try and do is you try to maximize that value, depending on the equipment and the installed capacity that you've got. So it's that balance. And effectively, that means you can afford to pay so much for the milk.
Can you get to $8.70?
Look, honestly, I think $8.70 might be light for this year. Certainly indications that we're looking at is that actually it might go higher than that. But you got to remember, we're only 2 months into the season. You've only sold a tiny portion of the year as such. But certainly indications are that pricing is likely to strengthen across the year. I mean, Fonterra went up from $8 to $8.50. We went from $8 to $6.60. So I think there could well be room, and have to put a warning on that. That's not a guarantee of a future payout. But back to your,
don't start looking at the new Ford Ranger just yet.
Just yet. But back to your question, that's essentially give us confidence that once we've resolved those two issues, our farmers like doing business with us and have given us very strong indications that at that stage they'll start to withdraw their cease notices.
Right, yeah, because they're really, the clock's ticking for them too, right?
Clock's ticking for them too. They have 2 years. You basically have 2 seasons and a day, effectively, is the notice period that you have to give.
Right. You've talked a bit about why you think it's important, but can you expand a little bit more on the future for this company and what you would want to see, it doing differently if you can get this one over the line?
Look, I think a couple of things are probably worth also remembering is that fundamentally the two businesses that we run are well-run, smart businesses. So if I look at the Dunsandle business, it's a fantastic business, runs well, and 9 years out of 10 will make a very good return. Just not last year, but that's a different issue. Dairyworks, good business. Tim runs it, does a great job. Right, so that's a solid business. Ultimately, the decisions that were taken around some of the investments were taken not by the people who are running these businesses or operating these businesses. There were issues effectively taken, I have to say, by senior management at the board table, which for whatever reason didn't pan out. So ultimately, what we're doing through this CAPRI is actually taking that issue, solving for that issue. So the future for Synlait is really in the adult nutrition, infant nutrition, and value-add ingredient business going forward. So it's a little bit back to the roots, but it's really focusing on what we do well. because there is significant growth available to us in those markets. And just for context, I think it might be helpful to know that global dairy is worth approximately twice what Apple is worth, right? So about the recent report I saw from Coriolis is values it at about $900 million, which is twice what essentially Apple's capitalized at.
Wow.
Right? Global consumption of dairy is increasing by 1 point something kilos per person per year, as essentially the world gets wealthier, that you're seeing consumption increase. And here's a stat that absolutely blew my mind, is that the growth required to support the increase in demand globally is 1.2 New Zealands every year.
There's an opportunity.
So that's the opportunity that we're leaning into, right? I mean, genuinely, there is fabulous growth in this global industry, which we can play a big part in. And that's the opportunity for Synlait.
So it sounds like you're just cranking more and more out of that plant down in Canterbury.
Cranking more and more, but also being smarter about it, right? And also we announced yesterday that we will be retaining the Pocono facility. We're not going to process milk there anymore, so that milk is all, it was still our contracts, but Open Country will now be basically processing that milk, and we'll focus on actually adding value to essentially advanced nutrition through that facility.
But that was why there was quite a lot of investment in that plant once you'd already built it. So you're still
Correct.
chucking a bit of good money after bad there?
No, effectively what we're doing is, I think we still had a foot on a home base. So we've taken the foot off home base now. So we're just simply not going to process milk, which means we don't spend half the month processing milk and then half the month basically getting into nutrition, adult and advanced nutrition products. Now we'll be 100% focused on advanced nutrition products. We'll still use dairy, but that dairy will be processed somewhere else and will just simply come to us as an ingredient.
Was that pretty much the money that's been spent at that plant, which, you know, anyone that's sort of driven out of Auckland heading towards Coromandel sees this sort
Quite
of
sizable,
like huge piece of stainless steel and concrete on
Yeah.
the horizon. That's been the millstone around the neck, has it?
Yeah, that's basically that was a $450 million roughly facility, which essentially has never made a cent.
Wow.
Yep. Look, again, context, right? So you go back and you look at that. That business was kind of conceived probably 16, 17, 18, 19, 20 was kind of built. And our infant formula business was literally going off the charts at that stage, right? I mean, it had been in just relentless growth and it was doing extremely well. Analysts were kind of looking at our business going, ooh, you've got a bit of risk around the Dunsandel facility because, you know, Christchurch earthquakes, blah, blah, blah. You've got a single facility site risk. So can you basically put some money into somewhere else, which the business did. And then, of course, COVID happened. Infant formula dropped off a cliff for a period, and it's unlikely to recover to that same levels. The Daigou channels basically have evaporated. And so it never really got around to producing what it was intended for. So, you know, you'd have to say that was just really bad luck. I mean, super bad timing. Then the business basically invested a further $90 to $100 million, basically converting it to advanced nutrition, but it was still producing or processing milk. And the problem with that was it's too far really from the center of milk production. So the actual on cost for us to get milk from farms to Pocono was more than we could bear as an ingredient manufacturer as opposed to an infant milk formula manufacturer, which can absorb a lot more overhead. And so that was losing a fortune, frankly. Then we were commissioning the facility for the last year to produce advanced nutrition. That's a 300-day commissioning process, nearly a year. So ultimately, you know, we were losing best part of $1 million a week, which is not much if you say it fast.
I'm just thinking if I'm sitting there trying to make a decision about whether or not to back a company like that, that's pretty material information that I'd want to be building up as a.
Yeah, and that's and we just that's in the accounts. You'll see that it's pretty straightforward. So yeah, we had to find a solution for that, and so essentially eliminating dairy processing. going boots and all in to the adult nutrition and advanced nutrition business is the way forward for that site. And literally, we just announced that 2 days ago.
So you're actually holding the vote at that Dunsandel plant?
Yes, we are.
The Shareholders Association's been pretty active. I think that its open disclosure was that we still haven't quite made up our minds about whether or not we want to back this, so we're not giving that kind of guidance to people.
I respect the Shareholders Association's views. Conscious that when you leave a minority group out of a cap raise, that's pretty much a red flag for them, and so they're not going to be happy with that.
You're going to get a kicking from that, aren't you?
You're going to get a bit of a kicking for that, and I've certainly learned to take my licks, frankly, when you're since I've been doing this job. But ultimately, I hope that minority shareholders will read through the documentation and will understand that this is a rational decision. It hasn't been a decision I've taken because I don't like minority shareholders or the board doesn't like minority shareholders. We really like minority shareholders. It's just this is the only one that for us makes sense, ticks all the boxes for us to move forward with. So look, ultimately, I acknowledge the Shareholders Association always have a challenging job on these things. It's not easy, but I think they'll be sufficiently nuanced in terms of there's probably a headline which says dead rat, which I think was the headline. But below that, I think, as I said, even a dead rat can be nutritious.
That's a tasty thought.
Well, apparently it was a big thing in medieval times. Rat on a stick. Barbecued rat on a stick in London apparently was a real thing.
George Adams, thank you very much.
You're welcome.
Right, and thank you for joining us also. You can watch Shared Lunch on YouTube or listen on your favourite podcast app. Why not rate us and shoot us a comment about what you'd like to hear about in future? Ko mutu, that's us for now.